Good times at Goldman Sachs. Staff at the investment giant are reported to be getting a significant salary boost, but a lot of that money has been made on the back of surging food prices, which are leaving many around the world starving. RT's Alexei Yurashevsky has been looking into this story. Alexei, tell us, how does this affect food prices, per se, in Africa?
Well, this debate has been going on for many years now, but this latest controversy is definitely making this discussion even more fueled. Now, the employees of Goldman Sachs Investment Bank are in for some happy times. Their salaries have reportedly been raised and almost $500,000 worth of annual bonuses are to be paid out. All because in 2012 the company made about $400 million from investing its clients' money in a range of products known as soft commodities, such as wheat and maize to coffee and sugar. But what's good for bankers is damaging the global food situation, say experts, and many claim major investment players are contributing to a global food emergency. The United Nations warned that the world could be on the brink of a major hunger crisis this year after poor harvests in the United States and Ukraine. Food prices already surged last summer, with cereals hitting a record high in September. Last year, food cost 16% higher than in 2010 and more than twice as expensive as a decade ago, even after adjusting for inflation. With almost a billion people already starving, such a forecast could make things catastrophically worse. And the latest controversy with Goldman Sachs has once again reignited the debate on what actually stands behind the hike in food prices. Organizations like Food Watch say they are not the only ones. Financial players around the world bear a large part of blame by investing astronomical sums of money into foodstuffs and speculating on the prices to make big profits. In the last 3 years alone, speculators have poured in an extra $100 billion into the sector, and that is expected of driving prices even higher. Investment and central banks deny this, saying futures trading is important for farmers and that their bets have no effect. Yet the price hikes bear scant resemblance to the natural growth in demand for food. Moreover, they are already creating grounds for instability, sparking protests and demonstrations. For instance, in several African countries, including Burkina Faso and Senegal, bakers went on strike recently because of an 80% increase in the price of wheat. So if this trend continues, people will be unable to afford basic staple foods. And if further harvests suffer too, it's not hard to imagine the consequences for the world's hungry.
Right, Alexei, thank you very much for breaking that down for us.